7-Eleven is the largest convenience store chain in America, owned by a massive Japanese parent company with 55 billion in annual revenue, and they sign 15 to 20-year NNN leases on prime corner intersections across Florida. If you haven't looked at convenience store NNN investing, here's the full picture on 7-Eleven. 7-Eleven NNN properties trade at 5% to 5.75% cap rates for corporate guaranteed deals. Building sizes vary significantly based on whether the location has gasoline, 1,000 to 2,500 square feet without fuel, 3,000 to 5,000 square feet with fuel. The fuel configurations sit on larger lots, around 0.8 to 1 acre for the canopy and pump layout. Entry prices range from $1.5 million to $5 million plus. 7-Eleven's U.S. operations are backed by 7-I Holdings in Japan, one of the world's largest retail conglomerates. U.S. locations total approximately 13,000 stores following the 2021 Speedway acquisition, which added nearly 4,000 fuel stations. 7-Eleven brings something unique to the convenience store NNN category: scale and institutional backing from a global parent that dwarfs most U.S. publicly traded retail companies. The convenience store model is recession resistant. People buy fuel, cigarettes, and quick consumables regardless of economic conditions. 7-Eleven's Florida presence is concentrated in major metros: Miami, Orlando, Tampa, Jacksonville, which means you're buying prime urban corner real estate with a credit tenant on a long-term lease. The fuel component, where present, adds operational revenue that makes these locations stickier for the tenant and more valuable as underlying real estate. 7-Eleven leases are typically NNN with 15 to 20-year initial terms and 5-year renewal options. Rent bumps of 7.5% to 10% every 5 years are standard on newer deals. One important note: 7-Eleven leases are NNN, but not always absolute NNN. Verify the specific lease language. The corporate guarantee comes from 7-Eleven Inc., the U.S. operating subsidiary, which is backed by 7-I Holdings. For properties with gasoline, the lease structure may include environmental provisions and different liability allocation. Read this carefully with your attorney. 2 specific watchouts for 7-Eleven. First, environmental diligence on fuel properties is non-negotiable. Get a Phase 1 environmental site assessment. And if there's any indication of prior contamination, get a Phase 2. Underground storage tanks carry real liability, and you need to understand exactly who bears environmental responsibility under the lease before you close. Second, 7-Eleven is a private company owned by a Japanese conglomerate. There's less public financial transparency than a NYSE-listed tenant. That's not unusual in convenience store NNN, but factor it into your assessment alongside the corporate strength you can verify through published data. Third, confirm whether your deal is corporate guaranteed or franchisee guaranteed. 7-Eleven does have franchisee operators, and that distinction matters for credit and cap rate. 7-Eleven properties are a solid category for investors who want urban corner real estate with a strong private parent guarantee. I'm Ryan Solberg with MaxLife Commercial. If you want to evaluate 7-Eleven NNN properties in the Florida market, reach out. Visit maxlifedevelopment.com or call 321-586-2121.